Hello, welcome to McBoss Capital Channel. My name is Michael Chu. This is a market recap video for week ending December 13, 2024. So we have roughly, I think, let me see here, 1 week, probably like roughly about 2 weeks left for trading. So yeah, and we have some big dates coming up. 18 is when the Fed meeting announcement will happen and what they will think. Expecting a quarter point cut is what the market is thinking. And also, so if we look at the CME future here, you can see here we're going to go from 4.5 to 4.25%. Um, and basically, there's no expectation of cut in January, but there's one in March and one in June and one in September. So that's what the market is expecting, more spread out cuts over the next year. The Fed will also probably have their projections for next year as well. So unless they change that course, if it's not similar to what the market is expecting, then maybe if they plan to cut less than that, like 3 times next year, then maybe the market might sell off. But I think they will probably stay that course, like be moderate about their rate cuts and just watch and see how inflation and stuff goes with as well the economy and job numbers. So let's look at Nasdaq first. Right now, this chart still looks healthy. At least on the weekly chart, it did make 20,000 right here. You can see a big milestone for them. The last time, I think the number was 10,000 was right down here, right around like I think after the COVID in around June or May. So it only took like 4.5 years to double. So that's a pretty good measure in terms of performance. So that's yeah. So and now right now Nasdaq is on a 14 weeks up, with only two of those are red down weeks. So you can see this rally has been pretty strong, and we'll see later on that some other index are not as strong anymore. So the fact and mainly because of the bank stocks, we'll talk more about it in a second. But let's go back to daily chart on the Nasdaq. We see this Wednesday. Um, it closed above 20,000, but it hasn't made a new intraday high since that day. So 20,055. Okay, it did hit an intraday high on Friday, 20,061. Um, it did reverse by end of day, so but we'll see. This is a pretty big reversal in the morning on Friday, so and it come back not quite halfway point, near the halfway point, so we'll see what will happen next week. If we look at the range here, oh, it doesn't show the range anyhow, but it's like slightly below the halfway mark. Um, so like I said, this index still looks healthy, but if you look at equal weight Nasdaq 100, this one looks unhealthy right now. You can see it got rejected at the 10-day moving average like 3 times actually. Like wow, that's not right. It stood around the 10-day for like 2.5 days, and then it fell apart on Friday, right? So that's not a good sign, and so we are officially in a downtrend right now. You see that slope right there. Um, and now we're down to 21 days. So if we do break 21 day here, it's probably gonna go down to 50 day. And then we'll see what happens. So this doesn't look healthy at all. So the market breadth is getting a lot weaker. Let's jump to S&P. So on the weekly chart on S&P, it did have a down week, very slightly, but still, well, the uptrend is still intact. So that's the good news. On the daily chart, you can see it didn't make a new high this week. So that's a divergence from Nasdaq. So that's not usually not a good sign as well. And right now we're also on a kind of a downtrend mode now based on those highs there. Now it's not anything too crazy yet. Like we're still holding above the 10-day green line. The 21 day is not far from it, so it's possible it'll come down to 21 day, and then after that we'll see if it comes down to 50 day. So notice the last time we hit 50 day was like late October. So on the equal weight RSP, you're seeing much more negative divergence here from Nasdaq as well, and even from the main index S&P 500. So you can see we are now coming back to the red line, which is the 50-day moving average. Of course, we're still in the channel line here, so I think everything still looks okay. But we're starting to look a little bit, scary here. If we do fell below the 50-day here, like really, it could go as far as the black line is, right? So, which is the 200-day moving average. I hope it doesn't, but right now it's showing a lot of weak signs. And I mean, volume is not too crazy, but it is like near the average quite a bit, right? So there's definitely selling happening. So Dow Jones not acting well. You can see it has slide below the 10-day green line, it has slide below the 21-day. Now it's heading towards the red line. So, this is a lot of days of selling right now. So, I mean, we could see a 1-day relief here towards the green line, and then it could resume its downtrend after that. So just be aware this could happen. It did find support many times at the 50-day if it does come down there. So again, that will be a key important area, because that's where most institutions trade around is the 50-day. If they do break that 50-day, it should bounce back like pretty fast within 2-3 sessions. If not, then we could have a lot more further to go. So for Russell, it was making good progress, but it's very volatile, right? You can see after this breakout right here, it pulled back so hard, and then here recently we pulled back really slowly. I thought maybe this is a good chance, if it does bounce, a good chance to buy into this bounce, but it never did bounce. Instead, Thursday and Friday we saw even more selling come in, and it broke that tightness. So it has accelerated right now. So the selling. So that's not good news, right? Now will come. It's very close now to the red line. So I'm not surprised if it's gonna hit it, or maybe after 2 days of selling, it's gonna bounce back a little bit towards the 10 days. So the 10-day slope looks like this right now. We gotta be careful because the 10-day now could be a resistance level. So here you can see it's a little bit extended on the downside, so it could come back here to this line before it goes down further. But ultimately, I think we need to support at the red line because it did find support the last 2 times. Again, if we don't find that support and we crash it, um, then we probably going to be heading towards the 200, which it also found support the last 2 times here. So there's lots of support on the Russell. Like I said, I think this is a potential opportunity if we do go into this pullback even further, or even turn into a correction, like a 10% correction, this might be a good buying opportunity. But we'll see what happens. So this is a 10-year yield. It has crept up this whole week, as you can see, except for Monday. But yeah, Monday actually no, Monday it bounced. Monday, Tuesday, Wednesday, Thursday. So all 5 days was positive day for the 10-year yield, like moving up again, really fast pace. So that's definitely not good for like the small caps. Probably what happened, how fast this has moved up. So notice the U.S. dollar index also creep up like 5 days in a row. So that's also correlated in some sense. The oil also shows some good progress here. You can see the oil price has moved up as well, really fast. Like it's now near the high right here on the previous high. So gold was doing really well like Monday, Tuesday, Wednesday, but then Thursday, Friday it kind of fell apart again. So not sure why this is not following the same trend, but because usually those tend to move together, but this one didn't move Thursday, Friday. So this is really concerning home builders ETF sector here. Why? Because like it keep going down even despite like I guess part of the reason is the yields went up, right? So that's not good for long-term interest rate, and that could hurt the home builders further, and I guess that's what we're seeing right here. Um, but it's concerning in the sense that we are very close to this low here, and if we break those lows and the red black line here, this might be the first time we have broken the 200-day moving average in a long time. So I'm just putting this out there, like this could have more effect on the overall sentiment of the market because this has run for a long time. I mean, this last time it broke was right here, um, back in late 2023, but it did recover after that very strongly. So we have come a long way, right? Like home builders were one of the earlier sectors that ran since the 2022 bear market, and then we had this huge correction here, we had another correction here, but so far all the corrections have except this one has held that 200 days. So now we're so close to the 200 day. Um, we have to see if this is like running out of steam, and what does this also imply about the general economy, if the home builder sector is not doing well. So on the IBD 50 innovator ETF, here you can clearly see on Monday it was a huge drop that day for growth stocks, at least for the IBD 50 stocks. And since then, it has not recovered. If you keep finding resistance at the green line, which is the 10-day moving average, so this tells me that the market is not ready for growth stocks right now. It seems that it has given up its steam, and and so it's running out of gas here. So um, will hit the red line. I'm not sure, but it looks more and more likely that this will uh, look weaker. And again, there's no volume coming in to buy the stock after the sell-off. So again, this is almost like what I call an L-shaped pattern, which usually leads to a further L-shape again, something like that. So just be mindful that growth stocks are not doing as well. And in my video where we're going to go through my growth stocks list, we will see many stocks are in downtrend right now, which means they're below their short-term 10 or 21-day moving average, which is a very negative sign, because we haven't even seen the index correct, but yet the growth stocks are already correct. That usually signify further downturn coming up because the index start correcting, which means even more selling is happening. Then underneath, we can see even more stocks have more losses. So just be mindful that this is happening right now, and we gotta be cautious at this moment. Definitely locking in some profits if you can, and just leaving part of it to take some more risks. But otherwise, doing some selling here might be a good thing, especially you don't want to give back a lot of those gains, right? If you have them. Again, we'll talk more about that in my growth stocks list later in another video. Please follow that one. So I want to talk about some secondary indicators right now. You can see bullishness amongst newsletter writers tracked weekly by investor intelligence ran up to 2.9% as of last week. That's the highest level of the stock market optimism since 64.2% reading in the week ending July 26th. In August, typically a time when equities cool off, the Nasdaq finished 0.7% higher of the month, but it had fallen as much as 10.7% that month as well. So if you look at this chart right here, this was the last time in July right here we hit like 64%. Right now we're at 62%. So you can see every time we hit that 60 something percent, we have gone quite a severe correction or pullback. So and we're getting a little bit extended for sure. And in terms of bullishness, there's lots of optimism. I just wanted to point this out because we don't know how much this will last, but right now we're seeing strong evidence behind the scene, right? The market breadth is really deteriorating, and stocks are starting to pull back, and yet this is still at 62%. So that's very interesting. But of course, maybe by next Wednesday when this number change, it might be much lower, but I don't know. And also on the bears, you can see it's come down to 16%, which is also pretty low. So just be cautious about this. We looking at the put call ratio. We also hit a low recently right here. So just beginning of December or something like that, close to that. So now it has slowly climbed back up as the market started to pull back on at least on the growth side. So yeah, so this is also interesting, right? That we have a pretty low put call ratio recently, and now we are starting to see it starting to move back up because there's lots of selling in the background. So let's take a look at the immense decline line. This is New York Stock Exchange. You can see S&P 500 is up here, and we have starting to go down slightly here. Still nothing too major, but you can see on the advanced decline line it is much more steeper, which means there's a lot more stocks down than up as this last couple of weeks here. That is a little bit concerning. We're getting to the previous lows here, so hopefully we don't go much further. But if it does, could be a problem. On the Nasdaq advanced decline line, we see even though the Nasdaq looks healthy as we saw earlier, but look at the advanced decline line. We're seeing much more stocks down than up, and it has accelerated the last few sessions, and we almost near the previous low right here. Again, this is just not a good sign for Nasdaq in general. Um, yeah. So the other concern we have is we did see two distribution days this week, like Monday and Thursday. So right now, Nasdaq is at three distribution days, and S&P is also at three. So when we see a cluster of distribution days, meaning heavier selling, no, I mean selling in heavier volume, that's usually a sign of distribution. And and we saw two of those this week. So that's very concerning. On the accumulation distribution side, on the stocks that I follow, we can see that there is a lot more distribution. And this started since last week, Thursday, and it has continued this whole week. And you can see the numbers has increased even more by the end of this week. Whereas the accumulation really didn't go up or down too much. So there is still some stocks being bought, but there's way more stocks being sold right now, almost a 3-to-1 ratio. On the industry group side, we're seeing again the numbers are around 30s to 40 on the accumulation in terms of number of groups, versus you can see on Friday the number of groups being sold off is like at 90. That's quite a bit. On the different sector, we have technology, retail. You can see by the end of this week, none of these sectors here has net accumulation. In fact, financial sold off quite hard, energy commodities quite hard, and we have health and industrial even sold off more. And then we have technology retail right here. So the market is starting to look weaker right now, and so those are all concerns right now, I think. So before we dive into the spider sectors, let's take a quick look at the Bitcoin ETF here. It's still hovering, I think, around 100,000 here for the Bitcoin, and the ETF here you can see it's still pretty near the high here. So looks healthy. This chart pattern looks really nice, holding up the lows here pretty well. And if this breakout, we could go higher. So yeah, so I think the one stock that most people pay attention to is MicroStrategy. Now this one has kind of peak, right? It did this climax run right here, and then has one biggest down day and heaviest volume ever. So a lot of people got out. So that's one of the top sell signal. And ever since that day, you can see it just couldn't rise any further. And even though it's trading tightly right now, but it just doesn't seem to have the power to move up. But we'll see. Because this does follow the Bitcoin price, and right now we're near the 45-degree angle slope. If it does come back up and the Bitcoin start moving again and breaks out to new high on the price side, it's possible that this stock will move again. So let's see how that goes. So the first spider sector we'll look at is XLK. You can see here it did have a new low on Tuesday, recent low, and then Wednesday, Thursday, Friday it's pretty healthy. It was able to stay above the 10-day moving average. The retail sector has looked a little bit weaker as of Thursday and Friday. It's still holding tight on this pattern here, so overall it's still healthy. It hasn't broken the lows here. It's still near the 10-day. So we'll see if this could bounce off here. So look at the consumer discretionary holding really tight here. That's a really healthy chart pattern here. So lots of accumulation recently. You see those blue heavy volume days. So XLC, the communication service, we did have one gap down on Friday. So we'll have to see if that could hold the 10-day here like this previous one and bounce after that, or not. But the gap down day is a little bit concerning. So the industrial spider sector here looks very unhealthy right now. You can see it broke the red line, just a 10-day, 50-day moving average, and it stays 2 days below that now, consistently without any much of a bounce. And volume is starting to pick up here. So this is quite concerning. I would see like if Dow continue this downtrend, that would be bad. It has down many days now, so I expect some relief coming soon before it continue this downtrend. But yeah, this is very concerning. The utilities are also doing not good as well. Um, the low is right here, and we are very close to it. It's even though it's holding tight, it's not bouncing much either. So that's almost like waiting for the 10-day to come down further. So that's not a good sign. Even though we saw oil price came back up, you can see energy in general is just continue this sharp downtrend. I mean, this is really sharp. I don't. I mean, there's one right here that's sharp, but that was the August low. So that's, and we have this one. So I don't know. It looks like maybe we could see a bounce soon, like a relief, because this is a lot of days down. So yeah, energy has just been really hard. Um, it has short-lived every time it rallies. The metals and minings also suffer big losses, as we saw gold didn't do that well as well. So it has kind of deteriorated like Thursday, Friday quite significantly here. The financials are also in a downtrend mode, although it's not as steep. And you can see it's trying to go sideways instead of coming down. But overall, it is under the 10-day moving average and the 21-day. So it's on the downtrend until it no longer is. And when it comes back up, that might be opportunity there. But right now, we're not sure if it's going to hit this red line here. You can see regional bank also following the similar pattern right here. So it's the retail real estate also near lows here, also on the downtrend. So art innovation, which represent pretty high beta growth stocks, is holding up surprisingly better here. So that's very interesting. The art genomic revolution, more on the health biotech side, has come down pretty hard. So it's tried to surpass this 200-day. It fell once again. So um, yeah, I think it needs to tighten up more, and then maybe the third time is the charm. This is the IBD newspaper. Here's this week we have the inflation is sticky. Consumer price index rose 0.3%, with core CPI up 0.3%. So we can see right here 0.3 and 0.3. So it's still fairly on the high side, and on the year to year, it's also 3.3. Oh yeah, this is 3.3%. So it hasn't come down around this level so far. And then we have service also. That one has eased to 4.6%. So as I mentioned earlier, there will be a Fed meeting coming up this week. Expectation of cut of 25 points. And they will show the latest economic projections in the dot plot rate forecast. So that will be very important as we go into next year. We will also have Empire State Manufacturing Survey on Monday, retail sales on Tuesday, latest housing starts on Wednesday, and initial jobless claims on Thursday. And we're also going to be having the personal consumption expenditure price index coming out on Friday. So that's also important. We have earnings from Nike, FedEx, and Heiko, and Micron Technology. Let's talk quickly about the Chinese market. We had the big news of China government help stimulate the economy further, but that was short-lived on Monday. As you can see, it was a really strong gap up move. That day, I think a lot of Chinese stock went up 10 to 20%. If you chase it, you probably got punished. You can see Tuesday when it was big gap down, and then it kept going further down by Friday. So now we're back to the short-term moving average again. We'll see if this holds or not. But right now, it still looks okay. But obviously, if you chase that day, you would have been punished. And now let's see if it can continue its rebound here. KWEB, which is their internet stocks, technology stocks, also have a similar pattern. So we're gonna finish off this video with talking about the big mega cap tech sectors, semiconductor. This week you can see it's tightened up right here. Um, However, it seems like after this big nice cup base, it hasn't done much. Not only that, it seems to be below the 50-day line, which is the red line, more than previously. So it's trying to come back above it, but it seems to have trouble, right, to come back above it, and I don't like this pattern, just because it's of course any sort of good news could propel it out of this kind of pattern really fast. So we'll have to watch for that. The good news here is we can see more buying on higher volume here than on selling side. So overall, it looks a little bit more healthy. So first stop we're going to talk about is NVIDIA. We can see we have this low right here. And this is a very important low because it has two previous lows around the 132 area. Right now we're sitting roughly 134, which is not far away from that low. So we don't want to break that low because that could spur more panic selling, and that could lead to down further. And we haven't seen it hit the 200-day in a long time. So my expectation is that it doesn't do that as well. Even if it goes further down, it might bounce back pretty soon. So we'll see if that happens. But right now, Nvidia is a little bit weak compared to the general semiconductor group. And we can see some of the better stocks like ARM, it has started to move right here. So this is not too bad. Some of the smaller stocks like A-Lab is starting to also move a little bit stronger now. So this is the upper channel line. We can see we're near that line right now. It's possible that this will accelerate, and we could see climax run here. AMD has not done well. You can see this chart pattern. This is on a clear downtrend mode right now. Definitely not getting involved with this price movement on the semiconductor area. TSM is building a cup with handle pattern right now. So this is the handle right here. So if possible, this next time might work. So we'll have to watch for this. Marvel Technology continues to power higher after this gap up. So it pulled back on the after the earnings news, and then this bounce happened on Friday really strong. Look at the volume coming in, and then it make new high even. Like, yeah, very strong stock. We also have a really strong earnings report from Avago, Broadcom, and look at this base breakout right here. It's a very strong move that day. 24% on Friday, really high volume. Uh, yeah, this is the IGV software technology group. We have run up pretty nicely here, and then recently you can see we kind of starting to lose momentum here as we hit below this low right here. So now we're sitting at the 21-day pink line. The slope is pretty steep right now, 45-degree angle. Um, do we find support here? We'll have to see. There is kind of a mix of volume both on the up and down side. So although Thursday and Friday the volume has Fridays was more around average. The outlier this week probably was Google. A report news about their quantum chip, and you can see it bounced 2 days in a row pretty sharp, and then Thursday, Friday it gave back some, but the volume start to decrease, and so this 10 days is going to catch up here and see how it reacts as it comes towards that 10-day, whether we will see a bounce soon. But overall, this is a healthy chart as it break out from this nice cup with handle pattern. Microsoft has also quietly, they didn't make too much headlines recently, but you can see it has quietly moved up, and now it's holding pretty nice on the selling days. There's not too much volume. Friday a little bit near average, but overall it looks still healthy. You can see the 10-day moving average sloping up pretty nicely. So it could build a handle here, and have a breakout right here, or it could just keep going and break out from this traditional high. We'll see. Amazon still holding really nicely here. It did make a new high on Wednesday. Thursday, Friday, it pulls back on very low volume. very healthy. The 10-day slope is right there. So there could be more room to move up here. We also have Meta, who also recently broke out. This one also pulled back slightly on Thursday and Friday after making a new high on Wednesday. So yeah, very healthy as well. So all the mega caps look quite healthy. Uh, so yeah. In terms of Apple, also breakout recently. You can see it moving up really nicely as well. Nice slope right here, holding tight above the 10-day. Tesla is probably one of the, not surprised, but like one of the biggest movers this week. You can see how fast it's moving up right now, and volume is also picking up really nice. Thursday, the volume has actually subsided on the selling, and then Friday continue its move. So these are all healthy signs of this stock right now. It initially broke out right here, and then it moves up very hard for 4 days, and then it pulled back to the 10-day, and it has found support on the 10-day since, and now it's really accelerating. You can see this 10-day slope is starting to kind of a little bit curving up. Finally, we have Netflix. Netflix also make a new high on Wednesday, and look at the volume on the sell side. Tuesday, Thursday, Friday is pretty low. So it could find support here at the 10-day moving average. The slope is not as strong as other ones, but it looks pretty tight. So we'll see what happens here. Thank you for watching this video. Please like and subscribe, and follow my next video on the growth stocks list.